Hi everybody, this is Gary Dean with Sentiment Timing, and this is our technical video report for Thursday, January 9th, 2025. So the markets are closed today in memory of Jimmy Carter. And I know it's his funeral today. Rest in peace. And, so it basically what is going on right now, we're just kind of in this it seems like the bias is to the downside, but when you look here, we're really just hanging out near the top, and we're not really there's no breakdown at all. Now, if we actually take out these lows, this is where I believe we're going to be going, anywhere between the 56.85 down to the 55.77. But what's going to happen is we're also going to get some buy signals on the daily chart if things don't get too out of hand. You can see we had the sell signals here, so this move right here actually made sense on the downside, and now we're really just consolidating. So I want to go over what I'm gonna do instead of putting a written report out today. I'm just gonna go over the charts that I always show you. So this is the put call ratio, and basically when we're in these areas, it's not sustainable for a rally to continue. What happens, the time that you really want to be buying the market heavy is when you see fear in the market and everybody's buying puts, and you can see these are where we get these massive moves. Here you can see the same thing. We got up to these levels, we got a big move, but we're down here right now. And yes, we can get these moves, but what happens is once things break down, they break down really hard. So this to me is a red flag for the bulls and saying, you know what, we need to be patient. You don't need to chase, even though it seems like, okay, we're getting a little bit of a pullback. Until we start seeing fear in this market, I'm not going to be committing to any long-term bullish scenarios. So let's carry on. Now, another chart that I had mentioned was the stocks participating in the rally. So this is the S&P above the 50-day moving average. So in the black right here, the candlesticks is the S&P. Now notice this is the stocks above the 50-day moving average. So what this is telling us, when we get this move like this, as this is going down, that there's only a select few stocks that are really keeping the market elevated, and that's really your Nvidia, Apple, those stocks right there. But the reason why I've been saying, I'm a little interested in IWM, the Russell 2000, which is this black line right here, is typically when we're at these levels here, when nobody's really participating, the IWM and the small caps actually outperform. And this is why, right now, if you look where we are, we're at levels where I believe we can see the Nasdaq and the S&P kind of go one way, and the Russell 2000 go another. Now, I'm not pounding the table on it because I want to make sure. I think if the overall market is going to be heading down, which I think it has pretty good odds. I think everything is going to go down, but I just think that the Russell 2000 is probably going to perform a little bit better than the S&P and the Nasdaq. So this is why I've been saying that in the reports. Now, if we take a look at this is the NIAD. We had the sell signal here. But we're really just hanging out. It's not really giving us too much information. If we take a look at the weekly chart, and this is where what we're looking at is if it's going to come down to the bottom of this little, say, channel right here, we're looking at a move coming right around that 56.65. And if you remember, this is actually pretty much where I was saying the 56.67, where the support is. So this is really where I think I'd be a little more interested buying right around this area here, or starting to build a position. Now, being we've had this massive move, you can see right here that just doing a 23% retracement is taking us down to pretty close to the 5,500. So again, this would be the buy area that I'd be looking at, or start building a position to hold. And if we get down to these levels, you start getting very aggressive. Pick the stocks that you want, and you just ride it out for the next year or two. So anyway, that's the bottom of this channel here. If we take a look at the 60-minute chart, here we are. We're really just stuck in this range right here. And this is what I've been showing you guys is, here's the bottom of the range. Here's the top of the range. It looked like we were going to make a run up here and touch it, but we got this big move to the downside. Now, until the bears can take it through this support level right here, which is right around that 58.30, then we're going to break this range, and here's the gap closure, which is 57.81. But if we break that, then what I'd really be, I'd be getting, is looking to get a little bit more aggressive on the short side, is if we break this, come back up, and then this is resistance, and we come down, because, again, this is really the target area that I'm expecting this down move to go. I'm not, pounding the table to go short, but it's it's well deserved for some type of little pullback, and it really, a lot of it has to do with the valuation of the S&P. So let's go back to our charts. Hang on one second. So that's nothing. This is the daily chart that I show in the reports, and you can see here's it looked like it's like a little bit of a bearish wedge. So we broke through it, got back on top of it, but we ran right into the resistance zone, and sellers came in. And now we did a back test of this. And this is what I was warning about, where I said, we got this nice move, but it was really done in 2 gap up days. And there really was not, there was follow through on January 3rd. But the thing is that we just made it up to back test this trend line right here. And again, if the bears can take out this support, then we're coming down somewhere into the 56.60, or down into the moving average, which is the 55.77 area. So again, this is where I'd be looking. You can see we have a little bit of a bullish divergence if these lows are taken out. So again, if it comes down here, then, and we still we're maintaining these bullish divergences, I'd be looking, for a nice bounce to come up, maybe 100, 200 points. But right now, we just need to wait for this range to break, because until it does, it's not, hang on one second. I wasn't sure. Okay. So until this range breaks, we're really in no man's land, and you just need to trade day to day. Yesterday we did, hang on one second. So we made 2150. It was really just a very choppy day, so it was hard. The Condor trades, I meant one, we got in and we did okay with it. I took the profits, and the thing is that I got in, the other two I got into, we got stopped out, and there was just too big of swings. And being that we were going up and down pretty heavily, I wasn't really comfortable putting any more Condors on, because if you get stopped out of one end, it was, it had a higher probability of getting stopped out of both ends, and that's where, you take a hit. So I elected to kind of stay out and just kind of watch things, but we made a little bit. So let's go back to our regular charts here. And again, this is the buy area right around that 56.70 level. And you can see it was resistance, and then when we broke through it, it was used as support. Maybe the 200-day moving average is going to come up and coincide with that. Again, that would be a good buy areas on it. So that's what I'm looking for there, and also these, the bullish divergences. So let's take a look at the hourly chart. And again, we don't have any sell signals here, but we don't have any buy. We had buy signals here. We got the nice bounce, and now we came down. This is support. It's a 23% retracement. And if the bears can push it through this here, what happens is this channel or this range is broken, and then from there, I'm actually going to make this thicker so you can see it. This becomes a descending triangle, and if that plays out, that's where we're looking at a move coming somewhere down into, let me just take this and, okay. Yeah, so this would be the area right around that 56.11 if the pattern is going to play out. So again, it's one of the reasons why I'm a little bit on the defensive end here. I know that the quantum stocks that I've been talking about, where I actually took profits, I took half off, they got absolutely clobbered yesterday. And the big reason was NVIDIA's CFO saying that, he likes quantum computing, but it's not going to be, nothing's going to happen for the next 30 years. He doesn't know what the heck is going to be going on in 30 years. I mean, NVIDIA may not even be in business. So it was a stupid thing, but it was a good buying opportunity. I put down the RGTI that I put in a trade room, that I was buying the stock, the common stock, but I was also buying some calls on it. It was down 46%. And ended up making that was part of the 2,500 that was made, was that was like $1,000 worth. So I will send those out to members, the stocks that you really want to be, say, building a position in. They still may go down more because some of them are up 1,000%. So I'll send those out. I'll put them in an email tomorrow and just say these are the zones that I would be looking. But in any case, if this, this is really the thing. If the bulls can step in and bring it up and hit the top of the range, then we're still within this range right here, and we're really just consolidating. But if these lows are taken out, that's when we start looking at a move coming, where let's just say where I would anticipate selling to accelerate. We're kind of neutral, so no buy or sell signal on momentum. Here you can see this is the 15-minute chart. So this move right here, where we made a higher high, and you can see momentum made a higher low. So a lower high. So we have a sell signal there, and this is probably why we're seeing the some of the bulls having some issues pushing it higher. So the bulls, they're really going to have to get above the moving average 59.36. That's about 18 points above where we are. If they get above it, that's where we start looking at saying, all right, we're going to come up and possibly test the 59.97 or say 6,000, and then the top of the range, which is the 60.21. So this is it. This is the important line for the bulls. If they can get above it, we could see momentum pick up. And nothing's really, like I said, on the downside, the bears need to get it through this support. And if they do, that is when we're going to see some downside momentum really pick up. So that's really about it. There's not, not a whole lot. We're bouncing around. The market seems like it's trying to make a decision on which way to go. I personally think it's going to be to the downside, but I'm trading it on a day-to-day basis until we see support broken. So let's see what plays out tomorrow. Enjoy your day off, and I will talk to you guys in the morning.